You said that like right before.
Welcome. My name is Nikki Wetzel. I'm the Director of Communications and Advancement here at Prosperity Connection. We are a local St. Louis nonprofit that focuses on financial education and coaching. We help St. Louisans build the confidence, knowledge, and skills to enhance their financial well-being and achieve their financial goals. And today I have Jamal and Ben with me, and we are here to talk about how to unmess your finances. We know sometimes life happens and our personal finances can take a turn. We make mistakes. We all do. We've all been there. So we just want to talk to you about some things that you can do to take those mistakes and turn them around. I've got several questions that I'm going to ask Ben and Jamal, and we would love for you to chime in things that you would love to know. So please, please, please participate in the chat and ask your questions. But we're going to go ahead and dive right in. All right, guys, first topic. Let's talk about banking and bank accounts. What if we've messed up and can't get a traditional banking account? What do we do?
Like generally when people say, I can't get a traditional bank account, they're on check systems, which is it's a national repository of people that have, database, thank you.
There we go.
Database that has of people that have gone negative in bank accounts and might owe one or several banks money. Generally, that can prevent a lot of people from creating a new bank account because banks are a little bit cautious about potential customers going into debt with them. There are a lot of different products out there called like second chance banking accounts, which are designed for people that have gone negative but still want to participate in the traditional banking system. They're awesome. They can be a little bit more fee heavy, but there are a bunch of them out there. And if you guys have questions about finding the right one, come talk to Jamal or I. We can hook you up or point you in the right direction with a bank or a credit union as well. Those are always an option.
So banks and credit unions offer these. Okay.
Yeah.
Cool. Anything you'd add, Jamal?
I know it's one particular product that like it's modified just because just the accessibility in terms of getting signed up, the ease of access, and the openness that they provide for clients that have put themselves in a bad situation and need a second chance. And so it's definitely one we look for individuals to if they're looking for.
So Mocafi, MOCAFI, correct? And it's an app, right? So you can look it up on the App Store. Awesome. Anything else about bank accounts before we move on?
I would say that there are so many fintech, like financial technology options out there these days.
Yeah.
That you type in bank account in like your app store or something like that, and there's going to be a bunch of stuff that pops up. If you are restarting your financial journey, that's a great place to start. But like long term, you definitely want a traditional bank account with a credit union or a traditional bank, mainly just because it shows like reliability. And if you're going to go eventually try to get a mortgage or something along those lines, like a major purchase, they won't. It's easier to show bank statements than like pulling up your Chime or Cash App or something. Some organizations will accept that, some of them won't. So it's easier to just have something going.
Okay.
Then also kind of with those non-traditional is make sure you're aware of the different fees and do your research and make sure that you're not putting yourself back into a predatory situation where it's, hey, I got a bank account, but now I got these ridiculous fees that I'm getting and I'm getting charged for this and that. And so make sure you do your research. Just because it's available doesn't mean it's always the best product. So
that's called a fee schedule, correct? So always ask for a fee schedule. Advocate for yourself, and definitely look at that. Great tip.
And if you're on a website that's like trying to get you to sign up or something along those lines, I tend to tell clients to scroll down to the bottom and always look for the words FDIC insured, mainly because that's a reflection of like an accredited bank of some sort. It could be an app. Those are FDIC. Some of them are FDIC insured. Some of them aren't. But I tend to look for that when recommending products.
Just extends legitimacy of it.
For sure.
Okay. Sweet. Awesome. Great stuff, guys.
I wonder, does everybody know what like the FDIC?
Yeah.
No?
It starts with federal. I know that for sure. Yeah, like, so the FDIC is essentially the regulatory part of the government that governs banks. So when you hear of like banks being fined for malpractice isn't the right word, but essentially scamming customers or something along those lines. Or when after 2008, a bunch of banks got shut down for different lending practices, it was the FDIC that came in and said, hey, the things you're doing are illegal, we're gonna fine you or shut you down. And they also support, they're also a form of insurance for different bank accounts.
And that's the biggest thing.
Yeah, that's definitely the biggest part of it.
So they're protecting money, so
Yeah, for sure.
up to 250,000.
Yeah.
Which, that's a whole separate
Yeah,
conversation
different
about different conversation. Awesome, really, really good stuff about banks and bank accounts. I see that there are several more viewers now, so just as a reminder, I've got some high level questions we're talking about, but we would love to know what you want to know. So if you've got anything that you're curious about, like a mistake you've made or a mess you might be in, and you're curious how you can get out of it, please pop that in the chat and we will be happy to answer that. So second question, or topic really, credit cards. So let's start with, what if I can't get a traditional credit card because of XYZ things that have happened? What can you do?
Well, if you can't get a traditional credit card, typically it's time to go the secure route.
Okay.
And so just meaning you're gonna have to put some funds down. But the cool thing about that, when you show good payment history and you take care of your business in terms of paying everything on time, 6 months to a year, typically the money that you put down, that you get back, and then that secure credit card becomes your traditional
Okay.
secure credit
So
card.
it's a path to
Right, to be able.
back to traditional. Okay.
Not all of them do that, but that is like the best ones out there definitely give you your money back and let you expand your credit and all sorts of stuff like that.
Well, which one should they avoid?
I was just gonna say, do you have
because
any?
if they're not giving money, that's a problem.
That's also true. There are, I can't remember the names of certain secured credit cards. There are secured credit cards out there that actually don't check your credit. And those are great ways to just get a payment history going, which is really the key for building up your credit score and recovering from that. There's like Open Sky, I know doesn't check your credit. And I'm fairly certain that they don't give you your money back down the road, even if you've been making on-time payments. But that's a small price to pay if you can't get anything else.
Okay.
That's totally worth it.
Okay.
That being said, things like Capital One or Discover, Chase, a lot of the mainstream banking institutions have secured credit cards that do let you get your money back and continue to expand your credit.
And then for those individuals that are worried, or say I don't need a credit card, you definitely need one. Just because if you don't have a credit card, the highest score you can get is 690, just because your credit utilization is roughly 160 points of your credit score.
Okay.
And so it's definitely one of those situations where if you don't have one, you need one, and it's just making sure you go about it the right way and finding the one that's going to be beneficial for you.
That makes sense.
Yeah.
So we kind of alluded to this idea. So let's talk about the flip side of credit cards. Okay, I've got one. I've got a traditional one. I've messed up and I've gotten myself in a ton of credit card debt. Been there, done that. What do I do? What are some steps I can take?
Well, I mean, number one priority from my standpoint. Well, one, stop adding for sure. That's number one priority. Number two priorities, always make your minimum monthly payments. Most credit cards these days have a minimum monthly payment of like $25 to $75, something in that range. So always make those payments because that's really just gonna help your credit profile long term. And we all know that the credit cards are designed for us to stay in debt with them, right?
Yep.
And that's why those high interest rates. So one of the easiest ways that I've found for people to get out from underneath those credit card, at least the interest rates, so that they have money to make payments, but the balance isn't going down because the interest bumps them back up.
Yeah.
Doing like a balance transfer credit card is always a great route. So there are a lot of them out there now where you can get like 12 to 18. I've seen 21 months of 0% interest on any money that you move over. A lot of clients do that to push all of this debt onto this new thing where they can really focus on bringing down the overall principal before any kind of interest starts growing that amount again.
What kind of credit score-ish do you have to get a balance transfer credit card?
There's a range. Generally, I would say like 620 and
Okay.
above is a really good spot. I've seen clients get balance transfer credit cards with lower credit scores, but the length of time is generally shorter.
Okay.
Yeah.
So the better your credit score, the more time you're going to have interest free. That's where you see the 21 months versus maybe like 12 for a lower credit or 8 months.
Yeah.
Okay.
So
That makes
the
sense.
better the credit score, the longer that you're going to have to really bury that principal down and try to get that down as much as possible before interest starts building back up.
Yeah.
Some other strategies, create more cash flow for yourself.
Yeah.
If there's a situation where you have a certain skill or talent, or maybe you need to work a little bit more, create some more cash flow and send that directly towards those high balances that you have.
Yeah.
Just because we have to do something in order to fix it.
Yeah.
And so just sitting there and just letting it be is definitely not an option. And so whether that's extra shifts, whether that's creating a different small business for yourself, side hustle, do something where that funds are allocated to it. And if you don't have it as well, make sure you have a budget set up to make sure we start planning out how we're directing our money, what pathway we want our money to go, so that way we can have to start attacking what the real issue is as well.
Yeah.
And also ideally take it out of your wallet or purse or
Yeah.
whatever.
Yeah.
So many clients are like, oh yeah, I've been working on the balance, but then, I went to Target and I had my card.
And we all know Target's a trap.
Yeah, no,
Target's a
Target's
trap.
It's designed for you to spend money. But, sometimes it can be as easy as just removing it from sight and not having it in your pocket when you're at the cash register, and just go from there. Like really just being diligent is really the main thing I would say, of focusing on paying that balance down as much as you can.
Yeah.
So take it off your wallet, also take it off your phone as well.
Oh yeah, that's a good one.
That have to pay.
Everybody got
That'd be even easier, yeah.
Boop.
I never carry my cards.
Yeah.
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 Yeah. Your person
Yeah.
in every single way. Yes. Yeah.
All right, I got a question that came in from the audience, so I want to take that really quick before we move on to ours. Do you have any ideas or ways to handle a defaulted student loan?
Oh yeah, I mean honestly, that's probably one of the easier things that we deal with, because if it's a government defaulted student loan, private is a different situation, but a government defaulted student loan is really reaching out to the student loan servicer and requesting I forget the exact name of it, but requesting a default repair plan or
Okay.
something along those lines, where you make a certain number of on-time payments with them over, I think it's 3 to 6 months, and then one, those payments are going to be going to bring your overall balance down, and two, once you've demonstrated to the your student loan servicer that you're capable of making on-time payments and that you're restarting this process, they'll flip that from defaulted to on-time payments again.
Oh, wow.
You might still have some late payments in the past, but the overall student loan won't be declared as default on your credit report, which is going to be a huge benefit to your score.
And what's the website again? It's go to studentaid.gov.
Yeah, studentaid.gov, and then there's income-based repayment, or just on studentaid.gov, just search for default repair, and it should take you through the steps needed. Because it's the government, right? So there's a lot of steps needed, but they do have detailed steps of what you need to do.
Very cool. Great. And great question. Thank you so much. I don't see any other audience questions right now, so we'll go back to our list. So we talked about credit cards, right? So let's just talk about credit in general. Maybe I do have defaults. Maybe I have collections. Maybe I've got charge-offs. My credit report's hurting a little bit. What do we do?
Order of operation.
Yeah.
NDOS. Taking it back.
Order of operation. Late and
Charge-offs.
Hmm.
On-time payments.
continue making on time.
Yeah. Number one is on-time payments on active loans or credit cards. It's always number one.
Charge-offs is because the biggest piece of your credit score is your payment history. And those charge-offs, you're getting a constant late payment every month, and so definitely want to take care of those. Then after charge-off, we're gonna go into doing your collections. And then at the collection, you want to focus on reducing it.
And in collections, are there any we should prioritize over others? Are there any that matter more, like medical debt versus
For sure,
whatever
great
else?
question. So, traditional collections, whether that be like a credit card or a loan or something, I think should always take precedent over medical debt. Medical debts, they've been redoing how the FICO credit scores are calculated, and medical debts make up a lot less of your negative aspects, which is a weird way of saying it, but medical debts don't matter as much as like if you had a car loan go bad
Okay.
or your credit card was closed with a balance.
Yep.
Those are always going to be a priority. Medical debts in the order of operations, pretty much the last thing that you want to deal with.
Okay.
You can buy a house now, you can get a mortgage with medical debts on your credit report. Most loan officers, they want to see that the rest of your stuff is handled, and if you have some medical debt, it doesn't matter as much anymore.
They just passed a law and it's $5 period.
Here.
And so who's to say in the next couple of years, something else type of legislation will come out
Yep.
to change it as well. So I think it's probably trending towards that way as well.
Awesome. We can hope.
Yeah, we can.
We're-
Small note, speak up just to have that.
Yeah.
Okay,
Or-
definitely.
sorry. Number 4, let's talk about savings. I know when I was a coach, I heard this one a lot. Having no idea how to like build up savings, or I built up a savings and then like poof, it's all gone. I'm an overspender. I don't know how to save. Let's talk. I know that's a big bucket, but let's talk about overspending, undersaving. How do we build positive spending habits or saving habits, not spending?
Yes, building positive spending habits is a completely separate thing, but like building positive savings, I found time and time again, like separation of your accounts and automation is one of the easiest ways to do it. So many clients have said, yeah, I saved $500 and then I was at Target or I was at the store or something, and it's like, oh, I'm a little bit short, let me just transfer that money over to my checking account really quickly. And building a wall in between that is such an easy way for you to go, oh, you know what, I can't afford this right now.
When you say build a wall, tell us what you mean.
So if you have a traditional like checking and savings account at like US Bank or something like that, having a separate savings account at Chase or Wells Fargo or a local credit union and having your money being automatically transferred either every paycheck or once a week, whatever works best for you, from your main checking account to that separate savings account at a separate financial institution, setting that up for it to automatically happen every time is one of the easiest ways to just start building savings, and you're not even looking at it.
And don't get a debit card.
And don't get a debit card with that savings, yeah. So we want to make a traditional savings account, hopefully like a high interest one if possible, and then we just set it and forget it kind of thing. If you do need to make a transfer back to your checking, that's totally doable, but generally that's going to take a few business days for that to happen. And I found time and time again, clients are like, oh, well, 3 to 5 business days from now, I don't need this and or really want it after the fact, right?
Yeah.
So setting that up and setting automatic contributions to that, whether that be a percentage, whether that be directly through your HR, or whether that be once you get paid, every payday, you have a certain dollar amount, just shoot over to that savings account. That's one of the easiest ways I found to build up savings long term.
What would you say? So for myself, I like to say 10%.
Yeah.
Okay.
Yourself.
Yep.
That's definitely one concept I like to teach clients is making sure you give yourself 10% in terms of what you're making. If you have to do less, do that as well. But let's at least start and be consistent with it. Like you said, put it to the side, sit and forget it, and no easy access because we know how it is.
Yep.
Yeah.
That was the biggest game changer for me. Was like I had a U.S. bank account, checking, savings, just constant transfer over. The minute I opened up a high yield savings over at a credit union, skyrocketed. Which, by the way, a question came in. Let's talk about the different types of savings account. How do you know what type, or do you have a type that you would recommend? They're traditional. I know folks ask about high yield savings. Is there something else out there that people should know about?
I mean, that could be like a completely separate Facebook Live. There's so many different types of banking products.
Yeah.
And I think we would definitely want Sasha in on that. She's like definitely expert on the banking products out there. But with the way that the interest rates are going, they're like a lot of banks are offering high yield savings accounts. And really the main thing to look at is just shop around. At least with the high yield, and there's also stuff like certificates of deposit where you're locking your money away for a certain period of time and you're guaranteed an interest rate at locked away. There's also savings accounts. If you don't like the idea of having a separate savings account at a different institution, there's savings accounts like called low transaction accounts, which means that you can only take money out of it like 1 to 3 times a month. And that's just like, that's hard coded into the account, or they're gonna charge you an arm and a leg to take money out of the account.
Yeah.
And it's a way of like building
Putting
up
that
that wall.
Yeah.
Filling this thing in. Yeah, and so there's a bunch of different stuff out there. Yeah, and there's websites that I really like to send clients to. Nerd Wallet is a really good one, where you can compare different like high interest savings accounts, and you can actually like set up like Bank A and Bank B, show me the 2 types of accounts that they have, and you can see what the fees are in comparison, what the interest rates are, and stuff like that. There's a lot of resources out there.
Do you have anything? All right, awesome. The last topic that I have is, so we understand that I've made a mistake, I've messed up, I've gotten myself in this situation. There's a pretty long journey between that point and being back to like 100% traditional products. Everything is fixed and taken care of and whatnot. What do we do in the in-between? Where can we go? I know we've talked a lot about products already, but if there are any products you haven't already mentioned, what can we do in the middle? What does that journey look like from messed up to fixed?
Well, the first part of that journey would be reaching out to Prosperity Connection.
Yeah.
Shameless plug.
Yeah, for
Sometimes,
sure.
we do credit report reviews. After we walk you through your credit report review, we also do financial coaching to help you and guide you along the journey, because clearly right now, in terms of how you're executing and how you're doing things, you need a little assistance. But I like to tell everybody, even LeBron James has a coach. So even the best people need help in walking through things. So why not come out, give us a try? Most people love us. We haven't had anybody that doesn't. And so, yeah, it would definitely be reaching out to us and walking us through it, because for a lot of individuals, just that financial literacy, that financial coaching, that financial discipline, and financial education just hasn't been instilled, and it's not a bad thing.
Yeah.
Most people are dealing with it, no matter what your income level is. And so just getting that help and getting that walk there, getting somebody that can pat you on the back and letting you know, hey, this is what you need to do. We all need to help.
Yeah.
What else would you do?
I would say persistence is probably
Yeah.
one of the number one things. Is if you set yourself a goal, it can be, especially depending on where you're starting or you've had some roadblocks in the past and you're building yourself back up, setting yourself small goals and reaching those. And then once you've reached that small goal, set another goal and just be persistent as long as possible. And once you reach your final goal of, oh, I finally made it here, now what? Then you set yourself another goal. And doing that time and time again is going to make you not think about, oh man, it'll be 3 to 5 years before I'm back to where I was. It's, I need to reach this financial goal. I can do that in 6 months. Then what?
Yeah.
Nothing takes the place of persistence in my mind. Is setting yourself goals and reaching them and doing it again.
As someone who loves to check boxes, that speaks to me and to my soul.
For sure.
Check that box, move on, make another one, check it on.
Yeah.
What about, so you talked about our services, yes, and just so everybody knows, our services are 100% free all the time. We will never charge you. So what about credit repair clinics? I know Sasha and Heather talked about it last time, but for anybody that didn't see that video, you know.
It's been my experience that if somebody's charging you hundreds of dollars a month to fix your credit, they're writing dispute letters that we can do for you for free. Yeah, we'll give them to you, we'll mail them out for you if you want to, whatever you want to do. But if somebody says, I guarantee I'll up your credit score by 100 points in 30 days for $500, that's not really based in reality.
Yeah.
A lot of the times when somebody writes a dispute letter for something on your credit report, the credit bureaus are required to remove that from your report for 30 days while it's under investigation. And that's when that person pulls your credit and says, look, this thing's gone, you're up 100 points, that'll be $500, please. However, if you're writing a dispute letter for something that's valid, disputing it doesn't mean anything, right? Disputing is a tool to remove incorrect information from your report. And people of various reliability and quality, I guess is probably the best way of saying it, take advantage of that to take advantage of you. So if you're paying money to fix your credit, it's really not worth it.
Yeah.
So come talk to us.
I mean, think about all that money that you're spending that could be put toward paying down the credit card, putting down the debt. So yeah, that makes sense. Or saving.
Yeah.
Yep, absolutely.
Not a perfect job. A lot of times when people started this financial journey, they're expecting themselves to come out and the process.
Yeah.
And there'll be no roadblocks for understanding that because it is new, it is discipline that you're learning, education that you're learning. It's a new skill that you're learning. It's important to understand there is going to be failure in this process, but look at it as a learning. So that failure. So what made me do? Why did I do it? And then understanding, all right, next time I'm faced with the same challenge, how do I handle it? Because a lot of times when people mess up, they say, I don't have discipline. I don't know how to do this. It's like, you just start.
Yeah.
It's just like a baby starting to walk. They're going to fall a couple of times.
Yep.
But once they get used to it, they're doing it more and more. They're walking, then next thing you know, they're jogging, next thing you know, they're running. And so giving something a grace and understanding this is a new process. It's something I know I'm learning. There's going to be some bumps along the road. And so being okay with that as well is definitely important on that journey.
100%. Love that. Awesome. I don't see any more. Oh, hold on. One might have just come in. This might be a stupid question. There are no such things. But do you have a credit report if you're unbanked?
Oh, yeah, for sure.
Okay.
So your credit, even if you're having a bank account has nothing to do with your credit score.
Okay.
Generally, your credit score is derived from on-time payments with loans and credit cards, but there can be debts on there. There can be several other things on your credit report that can generate a score and generate a report. And not having anything on your credit report is not a bad thing. There's something called a thin file, which means you don't have any loans or credit cards or anything negative. It could be a young person, it could be somebody that hasn't participated in the traditional financial system. Yeah, just didn't want to do it. And we go and pull their credit and no score. That's okay.
I'm excited about
that.
No scores are better than
No scores are better than a low score, in my opinion. You open up a few products, like a secured credit card that we talked about. Credit builder loan. I've seen people go from no score to 700 in 12 months. And that's something really also to focus on is that we live in a society, in a world where pretty much anything is attainable within 48 hours if you really want to pay for it. Credit is not. Credit, I would say, it argues one of the last things where it's like, it's going to take time. Minimum of 6 months really to develop a score. Generally a year to really be where you want to be. But that's okay because that's how it's designed. There is no getting ahead. And if somebody's saying pay $500 and I'll up your credit score, it's probably a scam.
And the cool thing about it, you can buy super fast. Like if we think about it now, we all. So a year sounds like a long time, but really, as long as you take it. Unbanked is more so making sure you get that products every quarter. So that's what makes you happy.
Well, thank you for that last minute question. Appreciate it. Thank you guys. We are right at time. So unless you have anything to add, we will sign off. For those that maybe joined towards the end or had to jump off early, this is going to be pinned to the event, so you can always come back and watch it. And we will be back in 2 weeks. We have one of our wonderful volunteers coming to bust common myths about car buying. We know that purchasing cars is oftentimes a goal or something that comes up in our clients' journey. There's a lot of, like most things, information and misinformation out there. So Mindy is going to be here to help bust some of those myths and help you feel like a more informed car buyer. So I hope to see you again in 2 weeks. Thank you so much for joining.
Please.
Bye.